Something just happened in the silver market that has institutional traders scrambling. While most investors are watching their portfolios drift sideways, a specific technical level was breached that historically signals the beginning of violent price moves. And I'm not talking about some arbitrary line on a chart. This is a threshold that has preceded every major silver rally in modern history. Let me show you exactly what's happening right now, because the implications go far beyond just silver. This is about a fundamental shift in how smart money is positioning for what's coming next in the global financial system. Silver just broke through a critical resistance zone that it's been testing for months. But here's what makes this different from every other breakout attempt we've seen. The volume profile underneath this move tells a completely different story than what happened during previous rallies. When silver pushed higher earlier, it was retail investors chasing momentum. This time, the accumulation pattern shows institutional fingerprints all over it. Think about what that means. These aren't day traders hoping for a quick flip. These are the same players who positioned themselves in gold before it made its historic run. They're moving billions of dollars into a market that most people still consider a secondary asset. Why would they do that unless they knew something the general public doesn't? The answer lies in understanding what silver actually represents in the current economic environment. It's not just a precious metal. It's not just an industrial commodity. Silver sits at the intersection of monetary policy, technological demand, and supply constraints in a way that no other asset does. And right now, all three of those factors are converging in a perfect storm. Let's start with the supply side, because this is where the story gets really interesting. Global silver production has been declining for years, but the pace of that decline is accelerating. Major mining operations are facing ore grade deterioration, meaning they have to process more material to extract the same amount of silver. Energy costs are rising. Environmental regulations are tightening. And here's the kicker. Most silver comes as a byproduct of other mining operations. When copper and zinc production slows down, silver supply gets squeezed even harder. Now layer on top of that the demand picture. Industrial applications for silver are exploding. Solar panel manufacturing alone is consuming silver at a rate that would have seemed impossible just a few years ago. Every solar panel requires silver paste for the photovoltaic cells. As countries race to meet renewable energy targets, that demand isn't slowing down. It's accelerating. Electric vehicles use significantly more silver than traditional cars. 5G infrastructure build-out requires silver for its superior conductivity. Medical applications, water purification, electronics, the list goes on. But here's where it gets really fascinating. While industrial demand is soaring, investment demand is just starting to wake up. Look at what happened with gold. Institutional investors and central banks accumulated gold for years before the general public caught on. Silver is following the exact same pattern, just on a delayed timeline. And when retail investors finally pile in, the moves are going to be explosive because the silver market is so much smaller than gold. Before we go further, I want to mention something quickly. I put together a free guide that shows the saving secrets thousands of American retirees are using to protect their hard-earned wealth. It's in the description below. It covers strategies that most financial advisors won't tell you about. Worth checking out if you're concerned about where things are headed. Now, let's talk about what's really driving this panic button level we just hit. The technical setup is one thing, but the fundamental backdrop is what makes this move so significant. Central banks around the world are trapped in a corner. They printed trillions of dollars to fight the last crisis. Now they're dealing with the consequences of that decision. Inflation isn't going away quietly. It's becoming structural, embedded in the system in ways that can't be fixed with a few interest rate adjustments. When inflation becomes persistent, real assets become the only safe haven. Gold gets the headlines, but silver offers something gold doesn't. It offers leverage to the same monetary dynamics with a much smaller market cap. That means when the capital flows start, the percentage moves in silver dwarf what happens in gold. History proves this over and over again. Go back to the late 70s. Gold went from around $100 to over $800. That's an 8 times move. Impressive, right? But silver went from around $5 to $50. That's a 10 times move from a lower base. The same pattern played out in the 2011 run. Gold roughly tripled from its lows. Silver went up nearly 8 times. The leverage is built into the market structure. And here's what most people miss. Those weren't random moves. They happened because the monetary system was under stress. Sound familiar? We're living through the same dynamics right now, just with bigger numbers and more zeros on the balance sheets. The Federal Reserve's balance sheet is still bloated beyond anything we've seen in history. Other central banks are in the same boat. The debt levels are unsustainable. Everyone knows it. The question isn't if something breaks, it's when. Smart money is positioning for that break right now. They're not waiting for the headlines to confirm what they already know. They're accumulating silver while it's still under the radar, while the price action hasn't gone parabolic yet, while there's still time to build positions without moving the market. Look at the COMEX data. Commercial traders, the big banks, and institutions that actually deal in physical metal have been reducing their short positions. That's huge. These are the players who traditionally suppress price rallies to protect their derivative books. When they step aside, it removes a massive source of selling pressure. It's like taking the brakes off a car that's already rolling downhill. At the same time, the registered silver inventory at the COMEX has been draining. This is metal that's available for delivery. When that number drops, it signals that physical demand is overwhelming the paper market. And once the paper market loses credibility, once people start demanding physical delivery instead of cash settlement, that's when the real fireworks begin. We saw a preview of this dynamic recently when several major mints reported they couldn't keep up with demand for silver coins and bars. Premiums over spot price exploded. Wait times stretched to weeks or months. That's not normal market behavior. That's a warning sign that the physical market is tighter than the paper price suggests. Now connect this to what's happening in the broader geopolitical landscape. Countries are actively working to reduce their dependence on the dollar. The BRICS nations are building alternative payment systems. Trade is increasingly being settled in currencies other than dollars. Gold is playing a central role in this shift, but silver is coming along for the ride. Think about what happens when the dollar's reserve currency status erodes. All those dollars that have been sitting overseas for decades start coming home. That's inflation on a scale we haven't seen since the Weimar Republic. And when that happens, people don't want paper assets. They want things that can't be printed. They want gold. They want silver. They want real assets that hold value when currencies collapse. This isn't fear-mongering. This is pattern recognition. Every major currency in history has eventually failed. The dollar has lost over 95% of its purchasing power since the Federal Reserve was created. That trend isn't reversing. It's accelerating. And the people who understand this are moving their wealth into assets that survive currency crises. Silver is uniquely positioned because it serves dual purposes. It's a monetary metal with thousands of years of history as money. But it's also an industrial metal that's essential for modern technology. That combination creates a floor under the price from industrial demand and a ceiling that can blow off when monetary demand kicks in. Here's a scenario that keeps institutional traders up at night. What if we get a supply shock at the same time investment demand surges? What if a major mine has an accident or a country nationalizes its silver production? What if a large ETF has to scramble for physical metal to back its shares? What if industrial users start hoarding inventory because they're worried about future availability? Any one of those events could trigger a squeeze. All of them happening together would create a price spike that makes previous rallies look tame. And the scary part is, we're closer to that scenario than most people realize. The market is that tight. The fundamentals are that strong. The technical setup is that bullish. Let me paint you a picture of what this looks like from the institutional side. Imagine you're managing a multi-billion-dollar fund. You've watched gold rally. You've seen Bitcoin make new highs. You're looking for the next asymmetric opportunity, something where the risk-reward is heavily skewed in your favor. You run the numbers on silver. You see the supply deficit. You see the industrial demand growth. You see the monetary dynamics. You see the technical breakout. What do? You start accumulating, quietly, without making noise. You don't want to tip off the market and drive the price up before you've built your position. You use every dip to add more. You're patient. You're methodical. And you're absolutely convinced that when this thing moves, it's going to move fast and far. That's what's happening right now. That's what the volume profile is telling us. That's what the breakout above this panic button level represents. The smart money has made their decision. They're in. The question is, what are you going to do about it? Now, if you're sitting on retirement savings and you're worried about how to protect what you've built, let me mention something important. A lot of people don't realize you can hold physical gold and silver inside a retirement account. It's called a gold IRA, and it lets you get exposure to precious metals without the tax penalties of early withdrawal. I put together a comprehensive guide on how this works. It's in the description, covers the whole process, the rules, the benefits, everything you need to know. If you've got 100,000 or more in retirement accounts, this is worth understanding, especially with everything we're seeing in the markets right now. The guide is free, no strings attached. Just information that could help you make better decisions about protecting your wealth. All right, back to where this price is headed. Let's talk about the technical picture in more detail, because the charts are screaming right now. Silver has been building a massive base pattern for years. Every time it tried to break out, it got smacked back down. But each attempt built more energy, more coiled spring tension. And now that it's finally broken through, the path of least resistance is higher. The next major resistance level is significantly above where we are now. And here's the thing about breakouts from long consolidation patterns. They tend to run further than anyone expects. Traders who've been conditioned by years of failed breakouts are skeptical. They sell too early. They take profits too soon. And the move just keeps going without them. We're likely in the early innings of a move that could last months or even years. This isn't a quick trade. This is a structural shift in how the market values silver relative to other assets. And structural shifts don't reverse quickly. They play out over extended periods, creating wealth for those who recognize them early and have the conviction to stay positioned. Think about the gold to silver ratio. Historically, this ratio has averaged somewhere around 50 to 60 ounces of silver to 1 ounce of gold. Recently, it's been much higher, meaning silver has been undervalued relative to gold. When that ratio starts to compress, when silver starts catching up to gold's performance, the moves are violent. We're talking about silver outperforming gold by multiples, not percentages. And there's a psychological element to this that's important to understand. Silver is more accessible to average investors than gold. You can buy silver coins and bars for a fraction of what gold costs. That means when the general public gets interested, when your neighbor starts asking about silver, when mainstream media starts covering the rally, the demand surge is going to be enormous. Remember, the silver market is tiny compared to other asset classes. The entire above-ground silver inventory available for investment is worth less than the market cap of many individual tech stocks. When even a small percentage of global investment capital decides to allocate to silver, the price impact is massive. There simply isn't enough metal to satisfy that demand at current prices. This is why the panic button level we just hit is so significant. It's not just a technical signal. It's a confirmation that the market structure is changing. The players who understand market dynamics are positioning for something big. And they're doing it now, before the crowd catches on. Let's talk about what happens next. In the short term, we might see some volatility. Breakouts often get tested. Weak hands get shaken out. But the underlying trend is clear. The fundamentals support higher prices. The technicals support higher prices. The institutional positioning supports higher prices. All the pieces are in place. In the medium term, we're likely to see silver start outperforming other assets. It'll catch the attention of momentum traders. More capital will flow in. The move will feed on itself. And before you know it, silver will be making headlines again, just like it did during previous bull markets. In the long term, this is about preserving purchasing power in an environment where fiat currencies are being debased. It's about having real assets when paper assets lose credibility. It's about being positioned for a monetary reset that's coming whether we like it or not. The central banks know this. That's why they're accumulating gold at the fastest pace in decades. They're not buying gold because they think it's a good investment. They're buying gold because they know what's coming. They know the current system is unsustainable. They're preparing for what comes next. And if central banks are preparing, shouldn't you be? Shouldn't everyone who's worked hard to build wealth be thinking about how to protect it? This isn't about getting rich quick. This is about not getting poor slowly. It's about maintaining your standard of living when the purchasing power of your savings is being eroded by inflation and monetary policy. Silver offers a way to do that. It's been money for thousands of years. It's survived every currency collapse, every empire's fall, every financial crisis. It'll survive whatever comes next. And right now, it's sending a signal that something big is brewing. The panic button level we just hit is a wake-up call. It's telling us that the market is repricing silver for a new reality, a reality where inflation is persistent, where currencies are unreliable, where real assets are the only safe haven. The institutions get it. The smart money gets it. The question is, do you get it? Because here's the thing about these moments. They don't last forever. There's a window of opportunity when you can still position yourself before the crowd arrives, before the price goes parabolic, before it becomes obvious to everyone. That window is open right now, but it won't stay open indefinitely. When silver was at its previous highs, people were chasing it. They were buying at the top because they didn't want to miss out. They got burned when the rally ended. But the people who bought during the quiet accumulation phase, the people who recognized the setup before it was obvious, they made life-changing returns. We're in another accumulation phase right now. The setup is there. The fundamentals are there. The technical breakout is confirming what the smart money already knows. This is the time to be paying attention. This is the time to be making decisions, not when silver is making new all-time highs and everyone is talking about it. Think about your own situation. Think about your retirement savings. Think about your family's financial security. Think about what happens if inflation continues to run hot. Think about what happens if the dollar loses more of its purchasing power. Think about what happens if we get another financial crisis and the government's response is to print even more money. In all of those scenarios, real assets outperform paper assets. In all of those scenarios, silver shines. And in all of those scenarios, the people who position themselves early are the ones who preserve and grow their wealth. The panic button level we just hit is more than a technical signal. It's a message from the market. It's telling us that change is coming. It's telling us that the old playbook doesn't work anymore. It's telling us that we need to think differently about how we protect and grow our wealth. So what are you going to do with this information? Are you going to ignore it and hope everything works out? Are you going to wait until it's obvious to everyone and the opportunity has passed? Or are you going to take action while there's still time? The choice is yours. But remember, the market doesn't wait for anyone. It doesn't care about your plans or your timeline. It moves when it's ready to move. And right now, it's telling us it's ready. For those of you who've watched this far, I want to offer you something special. That free guide I mentioned earlier, it's available in the description. But if you're serious about protecting your retirement savings, if you've got at least $100,000 in any retirement account, I'm also offering an exclusive one-on-one educational web conference. No obligation, no sales pressure. Just a chance to learn from someone who understands these markets and can show you strategies that actually work. This is only available to American retirees who mention they watched this video. It's my way of helping people who are serious about taking control of their financial future. The silver market just sent us a signal, a clear, unmistakable signal that something significant is happening. The institutions are positioning. The fundamentals are aligning. The technical breakout is confirming the move. Everything is pointing in the same direction. This is your moment to decide. This is your opportunity to act. This is your chance to be on the right side of what's coming. Don't let it pass you by.